Hi, this is Professor Cataldo, and I'm going to walk you through a nice, easy way, if you're taking an advanced financial accounting course, to understand how the equity method is used in the assets section, usually of a parent company, in the assets section of their balance sheet. If there are any topics in accounting or business you're having difficulty with, leave a comment. I will try to develop a YouTube video to help you. Now, this is the type of material that would be covered in intermediate financial accounting, a little bit more than halfway through the course. If you have two sections at your institution, it would be covered in the second semester. If you have three sections at your institution, it would be covered in the second semester. When a parent company reports the carrying or book value of a subsidiary, their ownership interest in a subsidiary, on their balance sheet, they either use the cost method or the equity method of accounting. These are alternative US GAAP methods. This PowerPoint module is going to provide you with a nice, easy way to remember the mechanics of the equity method. Step one, if you've had introductory financial accounting or intermediate financial accounting, you're probably already very, very comfortable with this. So recall, retained earnings is an owner's equity account. It's increased by credits or net income. It's decreased by debits or net loss or dividends. So look at my T account. I have a beginning balance credit. If I have a net income, there will be a credit to retained earnings, increasing it and owner's equity. If I have a net loss, there will be a debit, decreasing it and owner's equity. And if I pay out dividends out of earnings, they are not retained. Dividends are not retained earnings. They are earnings that have not been retained. The dividends are a contra equity account that is closed out at the end of each accounting period to retain earnings, which is in the owner's equity section of the balance sheet. Look at the T account. If you already understand this and are very comfortable and very familiar with this, using the equity method for an investment in the assets section of a parent company's consolidated financials, it's going to be very easy for you to understand. So, the equity method for accounting for investments, it's nothing more than a mirror image of the mechanics used to increase retained earnings in the owner's equity section of the balance sheet. And there it is. This is the PowerPoint page that you want to print out, or you want to snip this. And if you understand one, it's a very simple matter and a very small step to understand the other. Notice on the left-hand side T account, assets are increased with debits. On the right-hand T account, equities are increased with credits. You already know this. Otherwise, you wouldn't be covering this material, which is more advanced. Other than the reversal of these mechanics, the equity method accounts for the investments account as an asset in precisely the same way as owner's equity account does retained earnings. Note that any type of asset impairment flows through to the retained earnings account in the owner's equity section of the balance sheet. So I'm going to look at the left-hand side first. Assets, investments. I've got a debit and a credit column in my T account. The beginning balance is a debit. Net income increases the carrying value or book value. Net loss decreases the carrying or book value. Dividends decrease the carrying or book value. And any permanent impairment also decreases the carrying or book value. Now look to the right-hand side, owner's equity. It is the mirror image. The beginning balance is a credit. Net income increases the credit. Net loss decreases the credit balance. It's a debit. Dividends are debited. That's a contra equity account. And there can be a profit reduction. That would be a debit. So, once you know the right-hand side, which is usually taught first, you understand the left-hand side, which is a more advanced topic, taught usually in the latter half of intermediate financial accounting to accounting majors and/or in your advanced financial accounting course. To summarize, if you understand the method of accounting for retained earnings, an owner's equity account, you already understand how to use the equity method to account for carrying value, book value, or the balance of investments, an asset account used by the controlling parent. Simply reverse the debits and credits. If you know one, you know both. Thank you.